Hey everyone, and welcome back to another Explainer. If you're a focused learner looking to cut through the noise and get straight to the facts, well, you're in exactly the right place. Today, we're taking a deep, objective look at a major player in the circular economy that's currently gearing up to hit the public markets, Ardee Industries. We've actually combed through their massive 400-plus page red herring prospectus, or RHP, so you don't have to. We're going to unpack the numbers, the business model, and the risks so you have the objective facts.
Okay, let's dive into this. Here's our roadmap for today. 1. The Ardee IPO breakdown. 2. Inside the circular economy. 3. Following the financials. 4. Use of IPO proceeds. 5. Key risks to consider. And 6. The final takeaway.
Section 1. The Ardee IPO breakdown, the macro view.
So, when you're analyzing a public offering, you really have to start with the foundational facts. Ardee Industries isn't some brand new startup. They were originally incorporated way back in 1993 as a private company, and they've undergone a massive transformation over the years, officially converting into a public entity. As they enter the public markets now, they're offering equity shares with a face value of 2 rupees each. Now, 3,200 million rupees. I want you to anchor your memory to that number. This represents the total amount of the fresh issue being raised in this initial public offering. That is a really significant injection of capital into the business, and it's absolutely vital to understand the sheer scale of what Ardee is aiming to achieve with this move. So when is all this happening? Well, here is the critical timeline. The anchor investor bid period kicks off on Tuesday, August 4th, 2026. Then, for the rest of the public, the bid or offer form formally opens the very next day, on Wednesday, August 5th, and the window closes relatively quickly on Friday, August 7th. If you're tracking this market event, this tight 3-day window is the exact timeframe you need to keep your eyes on. And this brilliantly illustrates a fundamental concept in IPOs that honestly confuses a lot of people: the vital difference between a fresh issue and an offer for sale. That's 3,200 million rupee fresh issue means capital goes directly into the company's treasury to actually fund its operations and growth. On the flip side, the offer for sale, which is up to 19,975,000 equity shares, is secondary. That capital goes directly to the promoter selling shareholders, specifically Sandeep and Nikunj Agarwal, who are essentially cashing out a portion of their holdings. The company itself doesn't see a dime of those offer for sale proceeds. Section 2. Inside the circular economy, inside the business. It's time to peel back the layers and reveal the operational engine driving Ardee. The term circular economy is super popular right now, but for Ardee, it means something highly specific: the environmentally responsible recovery and recycling of end-of-life products, specifically things like energy storage and non-ferrous scrap. Instead of mining new materials, they're reclaiming critical resources right from existing waste streams. This heavily aligns their business model with India's broader goals for green and responsible industrial growth. Let's look at their daily operations. They procure secondary raw materials like lead scrap and battery scrap from both domestic and international markets. And then they reclaim and refine those non-ferrous metals. Now, what's really interesting here is their strategic positioning for global credibility. Their brand, Ardee, is already impaneled with the Multi-Commodity Exchange, or MCX, in India. But beyond that, they've actually applied for a London Metal Exchange, LME, listing under the brand Ardee Lead 9997. That is a calculated move to establish transparent benchmark pricing and really boost international competitiveness. Section 3. Following the financials, following the numbers. Let's objectively examine the financial velocity of the company over the last 3 fiscal years. The year-over-year leaps in revenue from operations are just dramatic. From 4,190 million rupees in fiscal year 2024, they jumped to 6,675 million in FY25, and then they just crossed a massive milestone of 10,214 million rupees in FY26. That clearly shows a company scaling its top-line operations at an incredibly rapid pace. Let's move to the underlying metrics and see how this builds out the complete financial picture. Top-line revenue growth is great, sure, but we have to check their capital efficiency. And wow, their return on equity made a staggering jump from 36% in FY24 all the way to 81% in FY26, proving that as they scale revenue, they are successfully expanding their margin realization too. Their net profit ratio and return on capital employed are showing similarly steep upward trajectories.
Section 4. Use of IPO proceeds, strategic allocation.
We need to discuss exactly how Ardee plans to utilize that massive 3,200 million rupees they're taking in from the fresh issue.
The RHP is very specific about capital allocation. Step 1, and by far the largest chunk, is funding their incremental working capital requirements. They're earmarking a highly significant 2,200 million rupees strictly for this purpose, to support management's aggressive growth strategy over the coming years. Step 2 involves using remaining funds for the repayment or prepayment, in full or in part, of certain existing borrowings. It's a classic strategy, really. Fuel the daily operational engine while simultaneously cleaning up the balance sheet.
Section 5. Key risks to consider. The catch.
A complete picture isn't just about the exciting growth. We have to impartially lay out the grounded realities, too. We've got to start with the most fundamental market risk of this entire event. I'll read this quote directly from the prospectus. This being the first public issue of equity shares of our company, there has been no formal market. No assurance can be given regarding an active and/or sustained trading. So the crucial point is that investors are stepping into entirely untested market waters. Past private performance absolutely doesn't guarantee a liquid, rational public market for these specific shares once they actually list.
Beyond the market mechanics, there are real operational risks on the ground. Ardee operates in a highly labor-intensive heavy industry. They are heavily dependent on contract labor for their manufacturing operations, which makes them highly vulnerable to labor cost increases, strikes, or just simple non-availability of workers. Furthermore, as we noted earlier, their model requires vast amounts of cash just to run day-to-day. They estimate needing a total of over 4,748 million rupees in working capital for FY27 alone. Any disruption in their labor force or their ability to access that capital could materially damage their financial results.
Section 6. The final takeaway, bringing it together.
Let's distill everything we've covered into a concise conclusion. Ultimately, Ardee Industries represents a rapidly growing metal recycler, actively bridging the green economy with the public markets. The objective facts paint a picture of a company with a sustainable, globally ambitious model and truly impressive revenue scale. But that growth must be carefully balanced against the realities of a heavy industry operation, specifically their reliance on intense labor, vast working capital needs, and the inherent unpredictability of a first-time public offer.
You now have the facts directly from the source material laid out clearly and structurally. So I'll leave you with this provocative thought to ponder as you weigh the data for yourself. Given the rapid financial growth weighed against the heavy operational dependencies, does the circular economy, and specifically Ardee Industries, fit your portfolio?